This is a Forex Preview. Thanks for joining us at xm.com. Inflation data for August in the United Kingdom out on Wednesday might be unsettling for investors as another hot print is expected. But what would that mean for the Bank of England and the pound? I'm Cristina Marujos. Joining me today is our senior investment analyst, Haralambos Pissouros. Inflation in the United Kingdom, Haralambos, is likely to have accelerated again in August. But do you think we're anywhere near its peak?
Hello, Cristina. Indeed, inflation in the UK is forecast to have continued accelerating in both headline and core terms. And to be honest, I don't see a peak anytime soon. Headline inflation is expected to have accelerated to 10.2% from 10.1% year over year. But the Bank of England itself has projected in August that it will hit 13% by the end of the year. And actually, following the election of Liz Truss as a Prime Minister, I believe that inflation may end up even higher as her plans of cutting payroll taxes, scrapping an uplift in national insurance and tackling energy bills may prove inflationary.
Well, speaking of the Bank of England, it has signaled recently that its main focus now is to bring inflation back down. However, this week's meeting has been postponed for the 22nd of September due to the sad passing of Queen Elizabeth. However, do you think we'll see an exceptionally aggressive stance at next week's meeting?
Yes, there is a decent chance of a more forceful Bank of England next week. Actually, following August's 50 basis points hike, market participants now believe that policymakers will proceed with a larger 75 basis points increase. Currently, they are assigning a nearly 78% probability for such an action. However, what appears to be more interesting is that following the election of Liz Truss, market participants have raised notably the future implied path as well. They now expect rates to peak at around 4.5% next September, while 20 days ago they've been anticipating a peak at around 3.75% in May. In my view, by raising the implied path so abruptly, investors may now be more subject to disappointment. With several policymakers sounding dovish just last week, the Bank of England may proceed slower than expected, even if it hikes by 75 basis points next week.
And before I let you go, Haralambos, let's also look at sterling. What could the market reaction be this week, especially if you consider that the pound has been taking its cues recently from moves in stocks?
I believe that accelerating inflation could allow the pound to extend its latest recovery, as it could add credence to expectations of a more aggressive Bank of England. Nonetheless, taking into account that the bank itself has projected that the economy will slip into a recession by the end of the year and stay in such a state for a full year, I would expect the recovery to stay limited and short-lived. After all, the prevailing downtrend suggests that market participants are more worried over the economic state rather than trusting the Bank of England to relieve them from the pain of very high consumer prices. And as you very correctly pointed out, the pound has been falling victim not only to the domestic economic performance, but also to fears regarding the global landscape. Due to the UK's twin deficit, the currency has developed risk-linked characteristics, and thus it is tracking stock indices very well. And with Liz Truss planning to fund some of her policies through public borrowing, that deficit may widen further. So, if investors decide to start reducing their risk exposure again due to fast monetary policy tightening worldwide, apart from the equity indices, the pound could very well feel the heat as well.
Haralambos, thanks so much. This was a Forex Preview. Thanks for watching at xm.com.